The Shanghai Composite Index rose 0.5%, while the small cap Chinex lost 0.2%. The benchmark CSI 300 index gained 0.25% after sliding as much as 1.1% earlier. The State Council's National Teleconference meeting underscored authorities' urgency to support an economy hit by COVID-19 flare-ups and benefit targeted sectors like infrastructure, auto, and real estate, according to analysts. We did see some gains in these sectors, which include Water Conservancy. Companies in the sector jumped during today's trading, as the meeting could lead to more liquidity for infrastructure companies in the near future, as banks are likely to speed up project loan approvals. And at the meeting, Premier Li Keqiang expressed concern about the economy's recent downward indicators for employment, industrial production, power consumption, and cargo transport. Now, aviation was also under the spotlight, as China has recently completed test flights of its first domestically produced large passenger aircraft. That is taken to mean China's large passenger aircraft industrial chain has entered the fast lane of commercialization. Companies including China Avionics Systems and Avic Electromechanical Systems led the gains. And on the flip side, companies related to monkeypox treatment, agriculture, and tourism shed in today's trading. And also today, the value of the yuan fell, with traders weighing the prospect for monetary easing amid continuing economic concerns. Well, other Asian markets were down today. Investors really can't seem to get away from their worries about interest rates and inflation. We saw the South Korean central bank rising their interest rates by 25 basis points today, and the US Fed signaling further hikes in June and July before a possible pause. In Hong Kong, the Hang Seng slid below 20,000 points again, declining by 0.4%. And the focus here today is still very much on Alibaba, with the tech giant due to report earnings. We're waiting to see whether the firm has been able to prevent a further weakening of its financial position. Its stock fell 1.5% this afternoon. In Japan, the Nikkei 225 fell another 0.25%. A poll by Reuters yesterday suggested the Nikkei will rise 7% by the end of the year, and that would put it back where it was at the very beginning of January, but it needs to regain more than 2,000 points to hit that mark. So today, chip-related stocks were dragging on the markets. Tokyo Electron shed 2.4%, and some of those losses were offset by airlines and economic recovery hopes, making that the best performing subsector in Tokyo today. ANA rose nearly